presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compact Market Wrap YouTube update for December 23rd, 2025. This is the final one for 2025. I'll be back with you in 2026. Let's start with first of all, quick reminder, as I always do, click on the subscribe button so whenever I post an update, you'll be notified. Also, if you want to listen to the podcast, you can go to compact.com, click on Insights, and you can hear a much more detailed version of this YouTube update. Also, all of the previous episodes are there. If you need help with your portfolio, just email us at invest@compact.com or give us a call at 800-388-9700. Let's start with the numbers. Last week, really a flat week, not a lot going on. The S&P was up 0.13%. The Dow was down a little bit. We saw the Russell down a little bit. And we saw the NASDAQ up 0.49. So a quiet week going into the holiday. This is a holiday shortened week this week as we close early tomorrow. Closed on Christmas Day, obviously. So it's most of the people close the books for the year already. So it's a light volume week in the markets. Last week, the worst sector was energy, down 2.9% for the week. The best one was consumer discretionary, up about 1% for the week. But communication services, that's Meta and Google, up 31.8 for the year. And we're looking at technology at 23, industrial, S&P up nearly 17.75% for the year so far, gaining a little bit more today. Oil continues to drift down from $72 where we started this year down to $56 last Friday. So the market's oil prices have come down a lot. And we'll see if we get some kind of peace deal in Ukraine, that could bring prices down even more. The interest rates were down slightly from 4.19 for the 10-year down to 4.16. And that sort of supported the market a little bit. We did get numbers last week. The number of jobs created was much higher than expected, even though the unemployment rate went up. But that is what we're seeing. A quick update. What happens to the 12 days of Christmas, the gifts from the song? If you bought them in 24, you would have paid, well, not just about the same price in 25 for the turtle doves. The hens, about the same price. Calling birds, same price. Prices of Piper Pikings is up about slightly. Drummers are up slightly. And you're looking, the biggest gain is the 5 gold rings, 32.5%. Gold has done very well this year, so has silver. And as I mentioned a few weeks ago on this update, SLV I thought would do better than gold, and it has, because it has, I think, more upside on the charts. Looking at the weekly fiscal future, that's what I'm looking at in 2026. You can see that most of the gains come from, we're looking at tax cuts, spending cuts. That's going to be negative, which is good. We're looking at tax cuts, will give a lot of boost to the GDP. We're looking at investments and then new spending. You look at the same in the second quarter, tax cuts really kick in. And I talked about that a lot at the yearly meetings, that I think the OBB, the one beautiful bill that was passed last year with the tax cuts, really didn't impact as much in 2025, but I think they will have a much greater impact in 2026. So that is something that is going to be a tailwind for the market. But I believe we are going to see some choppy markets. And I've said, as the first week of January, that's how goes January, and how goes January goes the rest of the year, because that's when most of the large money managers start to position for the year. What do they like? Where are they putting their money? And that gives us some idea of what to expect for the rest of the year. So the next few weeks in the market are going to be critical to watch, what to expect. And that's where I expect to see the market to get somewhere around 7,600 for the S&P. That's what I'm looking for. So not a big gain, but somewhere around 8, 9, 10%. And that would be wonderful if we can get that. But it is going to be choppy. We are going to go up and down a lot more than we have. We did see a big drop this year in April when we had the tariff announcement. The market got very nervous. Everybody was talking about a recession. Everybody was talking about runaway inflation. And as I said at that time, I think tariffs are going to be deflationary, not inflationary. They're going to slow down the economy. We've seen a little bit of a slowdown, but we got GDP numbers, and they were blockbusters at 4.3%. The consensus was 3.2%. So we saw tremendous, the GDP is doing well. We will see some slowdown when we get the fourth quarter numbers in the next few weeks, and that'll show, I think because of the government shutdown, that'll show us a little bit more slowdown. So we did get also inflation was at 2.7%. Non-farm payroll grew more than expected, but unemployment was up to 4.6%. So that was ticked up slightly, but it is some of the highest numbers we've seen in a few years. Not a big increase there. As I mentioned, GDP was expected to be at 3.2. It came at 4.3, which was a big, big jump in the GDP number. Very good number on the GDP. We get durable goods tomorrow, and then we get capacity utilization, but not a lot of data this week. Looking at the technicals, still the target somewhere around 71.5 to 71.75 is the number I'm looking at for the fifth wave top. This is 3. We came down in 4. 4 is down, and then 5 is usually higher. We are pushing right up against the all-time highs, right, that we saw in October, and we are right about there today, pushing that 6,900 number. So we'll see if we can get, I believe we are going to get to this number before somewhere around 71 to 71.5. So we got another couple of hundred points on the S&P on the upside. That's the way I'm looking at it right now. This shows a wave 5, but if we do make new highs, that 5 will shift to over here. After that, we'll have to wait and see how we go. NASDAQ, the same thing, 25.5, 25,000, 25,500. We're 23,500 today. So another 200 points or 2,000 points is what we could see on the NASDAQ. Another 7-8% before we get to a fifth wave high. The same thing on the weeklies. Looks better here on the NASDAQ. Third wave, fourth wave down, and fifth wave to the upside on the NASDAQ. 10-year note still stuck in this, right in this range of about 4.25, 4.2 to about 4%. We did get a little bit lower here, 3.95. So still in this very tight range, just going back and forth for the last few months, and that's fine as long as we're somewhere between 4 and 4.25, 4.5, where the market can handle that. Gold making new all-time highs today, continues to move higher, but we are getting close to the fifth wave high. We gapped up yesterday in gold. That's the gap right here. Is this an exhaustion gap or a breakaway gap? We'll have to wait and see. High yield sort of just meandering along in this range, somewhere around here, 80.47 below the 50-day and the 20-day, which are about the same right here. So we're trading a little bit below that today, just going sideways there. Those are my thoughts. Those are my observations, and it has been a wonderful year in 2025. Hope you enjoyed the year, and we've seen 23 and 24 also were great years. As we prepare for 2026, I want to wish all of you a very, very Merry Christmas, Happy New Year, Happy Hanukkah, and Happy Holidays. So enjoy your holidays. I'll be back with you in 2026. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.